What's up, guys? So the last few weeks have been brutal for the tech market. Now, I know many of you may be holding some red stocks at the moment, but this is one I think that you're going to like. So today I'm going to talk about Alibaba and tell you why I love this company so much that I've made it one of my largest holdings in my portfolio. So Alibaba are one of the largest, most diverse companies that I've ever come across. Founded in 1999 by Jack Ma, Alibaba Group Holding Limited, through its subsidiaries, provides a variety of e-commerce businesses, cloud computing, digital media, and innovation initiatives in both its domestic Chinese market, but also in 45 international countries. To say these guys have a finger in every pie would be an understatement, and they are able to create revenues in a variety of areas. As most people are aware, their core business is in domestic retail, which they dominate in China, holding over 50% of the domestic Chinese market. Their two largest platforms are Taobao, its C2C retail, and Tmall, its B2C retail. Both platforms provide the ability for small businesses and entrepreneurs to open an online store to reach China's 1.4 billion population. Taobao is China's biggest online shopping destination with more than 2 billion products and services. You can literally find everything here, from original designs to branded products to even fresh agricultural produce. Even back in 2017, the combined transaction volume of both Taobao and Tmall was greater than all of the US's entire e-commerce sites combined. Its 1688.com platform is China's leading integrated domestic wholesale e-commerce marketplace, which connects wholesale buyers and sellers across a wide range of categories. However, its vast e-commerce empire goes far beyond mainland China, and they are now a major international player. Its Lazada platform is a leading and fast-growing e-commerce platform in Southeast Asia for small, medium enterprises, selling both regional and global brands, serving 70 million unique customers. AliExpress enables consumers from around the world to buy directly from manufacturers and distributors in China and around the world. Tmall Taobao World is a Chinese language e-commerce platform which allows overseas Chinese consumers to shop directly from Chinese domestic brands and retailers. Next is Trendyol, a leading e-commerce platform in Turkey, controlling 5 to 10% of all Turkish e-commerce sales. Daraz is also the leading e-commerce platform in Southern Asia, with key markets in Pakistan and Bangladesh, controlling over 13% of their local e-commerce market. And finally, Alibaba.com, which is the largest international online wholesale marketplace in 2019 by revenue. With all these websites serving billions of customers with billions of items, Alibaba needs to have an excellent infrastructure system to ensure that everything runs smoothly. Its SciNow network is its logistics platform and global fulfillment service, offering domestic and international one-stop shop logistics service and supply chain management solutions. This is special as their data and insights are used to facilitate Alibaba's entire warehousing and delivery process. They also have SciNow Post, a neighborhood delivery system that operates a network of community stations and smart pickup lockers. To manage all this data and bandwidth, they have to have their own cloud computing project, which is called Alibaba Cloud. This offers a complete suite of cloud services, including elastic computing, database, storage, big data analytics, AI, and machine learning platforms, to name just a few. In fact, this is the world's third largest and Asia Pacific's largest infrastructure as a service provider. But Alibaba offers way more than online e-commerce. Through mobile and online technology, they can offer consumer services to their client base, including LME, a leading on-demand delivery and local services platform that enables consumers to order food and groceries anytime and anywhere. Fresh Hippo, a proprietary grocery retail chain serving people with great produce. Kube, a leading restaurant and local services guide platform. And Fliggy, a leading online travel platform that provides comprehensive services to meet consumers' travel needs. Then there is their digital media and entertainment operations, which include platforms like Youku, the third largest online long-form video platform in China, which serves as their key distribution platform for digital media and entertainment content. Alibaba Pictures, their internet-driven integrated platform that covers content production, promotion and distribution. However, they are also innovating into other areas of web and mobile content. Their AMAP services provide a simple one-stop access point to end users with services such as navigation, local services and ride-hailing. DingTalk is their digital collaboration workplace that offers a new way of working, sharing and collaborating for modern enterprises and organizations. And finally, Tmall Genie is the #1 smart speaker in China by shipments in 2019. They have even moved into the financial markets with its service of Alipay, offering convenient digital payments and digital financial services, as well as a broad spectrum of digital daily life services to consumers and SMBs in China. Through its parent company, Ant Group, that has received so much attention recently, they are also expanding into digital financial services. They are looking to offer wealth management through working with institutions such as fund managers and insurance companies to offer money market funds and fixed income products to its clients. Microfinancing is a new area in which it's moving into, providing small amount, flexible term credit services to its consumers and SMBs. And finally, insurance policies, not just for its client base, but also for its large suppliers and reseller networks too. Alibaba is more than an e-commerce business. In fact, its relenting drive to expand into newer markets and business ventures is derived from Alibaba's mission statement: to make it easy to do business anywhere. Something that they are truly achieving and can be seen as one of their greatest achievements. The ability to put customer first and build their e-commerce, logistics, financial and cloud intelligence ecosystems around them stands Alibaba apart from any competition. People who say that traditional retail is dying because online retailers such as Amazon and Alibaba are only using their pricing methods to win is only one aspect. These businesses are fundamentally redesigning the process in which suppliers and clients interact. As when a customer comes to Alibaba's platform, they are connected with Alibaba's vast web of suppliers who, through using Alibaba's data and sheer scale, can offer them what they are looking for at the best price. This is known as smart business. The way that Alibaba integrates technology into their platform is staggering. And this is something that I certainly have not seen before, especially here in the West. They have incorporated big data and social selling through influencers, live streaming, and trying out products virtually using AI software. This allows them not just to recommend products, content, and services that their consumers need, but also inspire them for what they don't already know or want. creating new customers and generating even further sales from their consumer base. In fact, Alibaba's growth has been staggering, growing its revenues by 7,500% from 2010 to 2020. Now, of course, it's not going to see growth continue at this rate forever, but earnings are forecasted to grow by 12% this year. In fact, GV transacted in the Alibaba digital economy surpassed $1 trillion for the fiscal year 2020, which is simply staggering. Growth is key to Alibaba's management's visions, and they have set some very severe goals. By 2024, they want to serve 1 billion consumers and facilitate more than 10 trillion RMB of annual consumption on the platform. And then by 2036, they want to have served 2 billion global consumers, enable 10 million businesses to be profitable, and to create 100 million jobs. This is something that as an investor I like to see. We all know that Alibaba was able to grow initially based on Jack Ma's vision, but to see strong goals like this from management is reassuring. With all the growth that they have achieved, plus all the news of the new exciting areas in which they're moving into, I believe that these goals are more than possible should globalization continue to reignite in a post-Trump COVID world. To regular viewers, you will know that I like a company to have a strong management team and board. Their CEO, Daniel Zhang, has been with the company for nearly 6 years and has taken on a variety of roles. He was the CEO of Taobao before and the president of Tmall. It was here at Tmall that he created the famous Singles Day shopping holiday, which is an annual Chinese sales event with gross sales 3 times higher than Black Friday and Cyber Monday combined. He is joined by Joe Tsai, who was one of the original founding team and a billionaire investor in his own right, and also a partial owner of the Brooklyn Nets. He appears to be a well-rounded and supported by a board with good experience, including J. Michael Evans, a former vice chairman of the Goldman Sachs Group. I like to see that institutional investors also back this company. In fact, there are many key investors who support Alibaba. The most famous is their largest shareholder, Masayoshi Son's SoftBank, who own 25% of the company. Son, who famously invested $20 million into the company back in the year 2000, is actually worth over $47 billion himself. In fact, the top 25 shareholders own over 50% of the company. With both Vanguard and State Street being one of the top 10 holders, you can see that this company is loved by ETFs. In fact, checking today, I see there are 116 ETFs who hold Alibaba stock, with the largest being Vanguard's Emerging Markets Stock Index Fund ETF, which is ticker VWO. Alibaba's share price has been steadily growing for years. However, it has been known to fall considerable amounts, such as during the second half of 2018, when it fell as much as 35%. In late October 2020, its share price hit a 52-week high of $319.32 before retreating rapidly on the 3rd of November after the $34.5 billion Ant Group IPO was suspended in Shanghai and Hong Kong. The decision to suspend the IPO came after Shanghai exchange officials said it would halt the listing due to the company's inability to fulfill conditions amid changes in the regulatory environment. 2021 has seen the share price recover slowly, but it has dropped in recent weeks with the recent tech pullbacks. If you believe in a company, then you should see pullbacks as a way of entering into the position. I believe that its current share price is way below the intrinsic value of this company. As the simple calculation shows, their PE ratio is multiplied by their EPS. The PE of a company is quite volatile as the share price moves around, and so today the share price is actually trading for more than their IV. But I prefer to take a 6-month average PE that reduces the risk of noise in volatile markets. When you do this, you get an IV of $304. With the share price trading at $220 today, I believe that there's significant upside, and that's why I'm buying more. In fact, I own over $15,000 of this stock, and that doesn't include what I own of this stock through my many ETF holdings. Just like in my other videos, I want to check the financials to make sure that my thoughts are backed up by the finances themselves. Just skimming over the financial highlights for the 6 month ended September 30th, 2020, I can see some incredibly positive news. Now they report in CNY, Chinese yuan, but I'm going to highlight this in the US dollar to make it a little easier to understand. So revenue was $45.5 billion US dollars, which was up 32% year on year. Income from operations was $7.1 billion, again up 8% year on year, with adjusted EBITDA up 30% to $12.7 billion. And net cash provided by operating activities was a very healthy $15.4 billion US dollars. Drilling down a bit more, when you look at the revenue by segment, we can see that Alibaba performs strongly in nearly every one of their market segments, increasing revenues in all but one, innovation initiatives, which was flat. Their core business is performing well, with 64% of all revenues coming from within China and 86% of all revenues coming from core commerce. Although an EBITDA margin of 37% for their core business still shows strength, it was down on their 2019 numbers. So we would actually want to see this going up as revenue does. Other areas are still in loss mode, but growing. As with any innovative and fast-growing business, their costs are increasing, rising not only in terms of yuan, but also in terms as a percentage of revenue, up from 54 to 56% of revenue year on year. Back to the balance sheet, it is encouraging to see that both total current and total assets increase, whilst liabilities such as debt stayed constant. So they appear financially healthy to me. Their debt is satisfactory, having reduced their debt to equity ratio from 22.8% to 10.7% over the past 5 years. Their debt is well covered by operating cash flows, and they even earn more money than they pay, so interest payments are not a concern to me. This is just the sign of a strong balance sheet, and I have no real concerns over the financial stability of Alibaba. There is only one thing right now that is limiting Alibaba's success, and that is politics. 2020's Ant IPO pushed the Chinese government too far, and after plans for this were shelved, Alibaba's share price has been in freefall. Regulation is clearly one of Alibaba's largest risks, something that they highlight in great details on their annual report. They operate in increasingly complex legal and regulatory environments. They and their key service provider Ant Group are subject to a variety of Chinese and foreign laws, rules and regulations. And as they have also expanded their operations to other countries, they have become increasingly subject to applicable regulations in these jurisdictions. And even though Alibaba is huge, unfortunately the Chinese Communist Party is bigger and stronger. And after angering with them with the Ant IPO, I believe that there are really two paths ahead. The first will be a symbolic slap on the wrist for Alibaba, who will just have to understand their position within China and live with it, adhering ultimately to the Communist Party. The second path is a lot more strict, and I see this something like the Communist Party will try and make an example of Alibaba and make it difficult for this tech giant to grow. Although I've read many articles discussing this matter, no one knows what is in Xi Jinping's head. It is my opinion that China will want a successful tech industry to compete with the US. What they say and what they do are two completely different things, and long term, they will want Alibaba to flourish. This to me seems like a similar tactic that they tried with Tencent in 2018, which had a short-term impact on its share price too. As this situation is not clear-cut, Alibaba must be seen as a longer-term hold, as there could be further volatility that lowers the price or creates further buying opportunities ahead. There are a number of reasons why I've made Alibaba a large mainstay of my portfolio. They truly are an innovative company that is dominating the e-commerce market in China, and they have just begun to expand and take over other key international markets. This business area is a high margin business which they can increase as time goes by, leading it to be more and more profitable. They also have a variety of other offerings and will continue to develop more in the future, creating further revenues and increasing their synergies. They use technology, big data and AI in their services already, which is a sector that's only going to grow in the future. By harnessing this data now, I believe that Alibaba will see further exponential growth in the future. It's not all bad politically, as with Joe Biden looking to rebuild bridges with China, I feel that Alibaba will benefit from a shift back towards globalization. This might not happen in 2021, but I believe that they will be a big winner from his presidency. Finally, I'm a big believer in emerging markets and specifically China. I have lived there for many years and understand the culture. I truly believe this economy will continue to see significant growth over the next decade, and is one of the main reasons why it represents around 40% of my portfolio. So they're my thoughts on Alibaba. I hope you enjoyed the video. If you did, please leave a comment or give it a thumbs up. And don't forget to subscribe to the channel so you don't miss out on any content.